sharing some quality and timely information during one of the wildest times I've ever seen. My goodness, with our financial expert Chris Ingram with Infinity Wealth Management, that's been out here since basically been in the business 1998, been out here in Santa Clarita, helping people figure out what they should be doing with their finances. I mean, giving sound advice with one of the best companies in Santa Clarita. Again, Infinity Wealth Management. You can always reach out to Chris Ingram through us at 855-DG Radio. It's 855-DG Radio, because we're stoked that Chris is here sharing your quality information. Thanks for being with us, Chris.
Very excited to be here. Thank you. Oh, very excited to be here. Thank you.
Redo on that one, yeah. So it's great to have you here, and we've been talking a little bit about what's been happening in the markets and volatility. One of the things we haven't talked about is how long will this volatility last? I know that I'm asking you to shine up your crystal ball. Yeah, shine up your crystal ball and give us a little clarity here.
Yeah,
but,
Barry, do you have a magic 8-ball back there?
It says the future is uncertain.
There you go. Who knows? That's the only thing that is certain right now.
That's right. No, but really, I mean, you're in your circle. What are you guys talking about? Are you talking about this is a really short-term kind of panic thing, or do we think it's going to be a prolonged effect and it's going to take a while before it all shakes out?
It is really uncertain. You're getting different opinions from all sides. I think people feel much better today than they did about 3 or 4 days ago. Even though the market has been even more volatile over the last 3 or 4 days, I think some people believe that we're slowly building a base here. I think you go back to the fact that it's so uncertain right now. You need to invest knowing that it's uncertain. So, for example, if you're looking at getting into this market, trying to make money, which is you mentioned that going into the break. So
put you on the spot here.
Let's talk about making some money. So, in order to make some money,
listening out there.
Yeah, in order to make some money, I think it's a bad idea to say, well, today was the bottom, so I'm going to take all of my money, I'm going to dump it into the market right now. I'm going to pick this bottom. Picking a bottom is a losing strategy. You're going to be wrong. I don't care how long you've been in the business. You're going to miss the bottom. You're not going to time it perfectly. So it's more of a strategy or a solution to take pieces of the investable capital that you have and put it in at different times. Try and spread it out over a longer time period and slowly, we call it dollar cost averaging, but dollar cost average your way into the market. That way you kind of build a base around this bottom and you get to take advantage of the opportunity.
So you're talking about diversifying.
Yeah, you should diversify with the investments that you choose. But I'm also talking about, let's say you have $50,000. Take $10,000 and pick some names, some stocks, or some mutual funds, or whatever your investments may be. Pick some of those maybe today, and then maybe a week from now, pick some more. Maybe a month from now, pick some more with another 10 grand, and slowly deploy that $50,000 of investment capital out over time, so that if you're wrong today and it goes down more over the next week, 2 month, you have some more capital to reinvest at lower levels. And what will happen is you're averaging out the original investment into the investment portfolio, and then a year from now, when the market officially has rebounded, all of that money will be working well for you, and you'll have your entry point kind of spread out.
That was really sound advice with Chris Ingram, and I do want to put him on the spot. He did say a year from now that the market would be sound. Did you guys hear that?
Yeah, somebody called me a soothsayer yesterday. I don't think that I will accurately pick the time when it comes back, but I would love to say that given what I'm seeing right now, I really do think you will see the market recover. So this is not 2008. I don't think we're going into a total financial meltdown here. I do think we have problems. I am concerned. There are things that I'm watching, but at the same time, I do think that you can use this as an investment buying opportunity, and that you're going to be rewarded not 10 years from now, but in the nearer term when things recover.
I want to talk about why this is so different than 2008. And although we're seeing countries in Europe have some difficulty, I think that what's really different is that this time around, banks are flush with money. At least here in the United States, banks are flush with money. We're not seeing a financial collapse of financial institutions like Merrill Lynch or Bear Stearns, or you're not seeing those kinds of massive defaults. I mean, WAMU, those were big companies that fell apart. Well, you're looking at corporate profits are actually pretty strong, and I think that's what makes the difference this time around is that, companies have money. They're not failing.
Yeah, not only do they have money and healthy balance sheets, 75% of the companies are beating earnings expectations right now. They're performing well. I mean, from the corporate side of things look pretty healthy and relatively good. Now, the question is, people are concerned with what are earnings going to look like going forward with all of the questions and uncertainty that we talked about. But they do have very healthy balance sheets, and we're not seeing a bunch of bankruptcies. I had a client that referred her father to me during the 2008 collapse, and when he came to me, he had 75% of his portfolio in bonds. Unfortunately, of that 75%, 100% of them were in Lehman and Bear Stearns bonds. Oops. So he thought he was very conservatively invested, and what he saw was his Lehman bonds just completely go worthless. That we're not in that type of scenario. I mean, fixed income is actually really strong based on what you guys are seeing in the interest rate market. Right. There are safe places to go. 2008 was a total meltdown. People lost money in fixed income. They lost it in gold. They lost it in oil. They lost it in stocks. You name it, you were losing money in it. So that's not what we're dealing with right now. There are places to go. There are places to make money.
Well, what I like is what you were talking about is sitting back and taking a breath and not overreacting, because a lot of people, we just talked about some major items that just came about, the debt ceiling, our credit rating being downgraded, and that seems like it was months ago, and that was just recent, within the last week. Perfect example is people forgot that we had a similar stock crash per se just last year.
Yeah.
We had a little rundown, and people already forgot about that, and if they would have overreacted then they wouldn't have taken advantage of the increase that we had. I mean, basically that's what you were saying, right?
Yeah, I think it's as of August 5th. We have the market up about 10% over the last 12 months, and we have it up 20% over the last 2 years. But what people aren't remembering, and I remember it because I was, I was, in the heat of it last summer. And last summer, the focus was on Europe once again. And from April 23rd of 2010 to July 2nd, 2010, the market lost close to 16%. But most people have no clue. They don't even remember. It was a little bit more spread out than what we've seen recently. I mean, our losses have come within a 2-week period for the most part, and that was spread out over several months. But it was still a 16% pullback in the markets. Now, the markets finished very healthy at the end of the fourth quarter, and you're right. Pulling out would have been a disaster. So right now, I think over the last, it's somewhere around July 21st, I think, or July 22nd. We're down about 17-18%. Actually, market today, it's probably better than that, but it's almost in line with what we saw, the 16% pullback in 2010. So needing to panic at this point, you went through it in 2010, go through it again in 2011. We'll see, we'll see what happens. But I don't think there's reason to panic at this point.
Well, that's why I like listening here to Chris Ingram with Infinity Wealth Management. And what I love hearing, Chris, is how you over and over basically say, I remember it, I felt it, I take care of that. If you're smart, have a pro handle this so you don't have to. I mean, because seriously, these ups and downs are, go get some Pepto-Bismol and some X-Lax, because it's gonna affect you big time unless you have a pro helping you through this, because it's major. I see people stress out all the time. I mean, I watch my family; their mood swings with the market. Instead, let a pro handle it and make sure you don't make the wrong mistakes. Chris Ingram's given us some great advice today, and you can see how calm it is because you're not new to this.
Not new to this, but I always tell my clients, give the ulcer to me.
Pass the ulcer.
Yeah,
I like that.
Pass it on. That's what you're paying me for, is that I take on the ulcer and you don't, and let me worry about it. And I'll keep my clients informed, but mostly I'll take on the stress of trying to deal with the day-to-day. I mean, market up 423 points on the Dow today, so we, a very solid day for a Friday or for a Thursday. We'll see what Friday holds because it's been a seesaw week, but the sun will come out tomorrow.
It's funny how you just throw out there, Dow's up 423, yesterday down 500, day before that. I mean, my goodness, who would have thought we'd have these kind of swings? Okay, so we are going to go